Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's have a look at some of the stocks on the move today here in Europe. I'm Caroline Hepker with our Bloomberg reporter Chloe Millay. So I want to dive into all of the various deals and earnings announcements. And I think this is incredibly interesting. Schroders, one of the best known names in the City of London, or at least one of the oldest. And now it's agreed to sell itself to Nuveen.
Yeah, absolutely. So Nuveen is buying Schroders in a £9.9 billion deal, and that will create one of the world's biggest active asset managers. And so we saw the shares really jump this morning, up around 30% at the start of trading this morning for Schroders. And this is a company that will manage $2.5 trillion in assets. So this is going to be a really big deal. And so for Schroders, this also marks the end of almost 2 centuries of independence. You just mentioned it's one of the oldest names, and it really is one of the best known as well. And the Schroders brand will still exist. So there's that as well. And it caps what has been quite a tough time actually lately for the company. Shares have really underperformed European peers like Amundi and DWS, and has been facing quite a lot of criticism from its relatively high cost base, and also quite a lot of weakness in its private markets business. So this is going to be interesting to see how it does within this kind of bigger structure. It's also saying something a bit about the wider sector, the asset management sector. BI analysts have said that the takeover really underscores the structural cost pressures that are facing those active fund managers, and it really highlights the need for scale for those companies. So that might mean that we'll see more consolidation going forward within that sector.
So in terms of what else is happening, investors struggling to see what comes next in terms of artificial intelligence. That hasn't stopped EssilorLuxottica.
Yeah.
What about their glasses?
Yeah, we've talked so much about AI losers lately, but EssilorLuxottica would be considered very much an AI winner. So its partnership with Meta for AI-powered glasses is driving major growth for that company. So sales in the fourth quarter were way ahead of expectations, and that was mostly due to this massive demand for those AI-powered glasses. And Essilor was also trying in that statement last night to reassure investors that scaling up that production of those glasses wouldn't hurt margins too much, or in the long run, but because that was one of the things really that investors starting to get concerned about. And we are talking about a major step up in capacity. Meta wants to double production capacity to 20 million units or more this year. So Essilor will kind of continue to be under pressure going forward to continue reassuring on margins. But in the meantime, the sales are doing great, and there's a lot of demand for those glasses.
Yeah, and a big debate about privacy, about whether you can see the light on them, or whether you might be being recorded when you're in a public place. In terms of other stories that we're thinking about, Mercedes still have the drive to try to succeed in China, but they've had a bit of a tough time, Mercedes-Benz.
Yeah, they have, and the car sector is not out of the woods just yet, it seems. So Mercedes said this morning that margins will remain under pressure this year because it continues to deal with the same things that it has been dealing with for months, which is tariffs, of course, but then also this competition from China and from those Chinese rivals. So it said that it would cut costs and reduce production, especially abroad, given that there's labor protection agreements in Germany. So cutting those costs to mitigate some of that impact. But this really points to another potentially very difficult year for Mercedes and for the rest of that car making sector. We've seen Volkswagen and BMW also in the red this morning, being dragged down by those Mercedes results. And this is really going to be a test of that strategy for Mercedes, which is it wants to kind of go more upmarket, cut back on cheaper, more entry-level models, but which means, of course, more revenue per car, but also leaves it really exposed to weaker demand for those fancy cars. So we'll be looking out for that, and China still remains a big question mark as well.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.